All right, guys, what's going on, everybody? Good morning. Thanks for joining me. Saturday morning here, stocks and coffee. I've got mine right here, waking up. Let's see who's in here. Give me a shout out where you're from. And let me know if you're bullish or bearish on the market if you want. Just type in bullish or bearish. Let's see who's in here. We've got a fantastic turnout as usual. And someone let me know if you can hear me and see me okay and see my screen here. We've got, I'll do a little bit of roll call, but there's so many people here. I don't think I'll be able to shout out everyone. We'll get started here in a few minutes. Let everyone get in here. Jose, what's going on? Mike from Knoxville, Anant from Austin, Anton, we're international here from Spain. Nilam is bullish. Arini, I hope I'm saying your name right. Arena is bullish as well. Anthony from Kirkland has the Starbucks Sumatra. Danny, what's going on? Anant, Brian from Vancouver. We've always got a big Canadian turnout. Jose from Chicago. Brian, Christian from Florida. Bill from Ontario. Todd from Oregon. Anastasio from the San Francisco Bay Area, as you can see here, diehard Niners fan. I think I've actually got my Niners shirt on as well. Robert from Massachusetts is bullish. Kiram from Turkey. Laura, what's going on? Amy from Santa Barbara. BB from North Carolina. Laura from Stamford. Got Fadi from Jordan. So we've got a big international turnout here. Stephen from Toronto. Let's see here. Gaj, what's going on? Gaj from Austin. Leonardo, probably not too far away, Plano, Texas. We've got Shaban from Kuwait, Nyang from NOLA, and Adam from North Dakota. All right, guys. We start these with a book recommendation. Those of you who know me well have probably seen this one before, but I'm rereading it. Science of Fear, really good book. One of my favorites, all-time favorites. Really good book on decision-making, evolutionary biology, and it's really helpful to someone who is a trader. All right, let's get into it. As usual, we're going to start with market analysis. We're going to get into some areas that we should be watching, and we'll pick some stocks in those areas to be watching to potentially trade this next week. We'll go over a few of the positions and bulls alerts that we are in right now. And then I'll go over a couple of recent trades. And remember, guys, if you need to get a hold of me anytime, here's the contact information. You can write that down or do a screenshot here, and I'll get back to you. Just contact me anytime here, singhjd1@aol.com. Of course, the Bulls on Wall Street site, my own site, and Twitter, Instagram, posting stuff every day there that you'll find helpful. And of course, you can message me there as well. Someone was asking about the book, Science of Fear, one of my all-time favorites. All right, let's get into it. Let's start with the market, top-down approach. We start with the market, then go to industries, and then go to the stocks. And from the stocks, then we look for setups. So let's look at what the market's doing. You guys know the drill. We always look at SPY, the Qs, IWM. We call SPY the market, 500 of the biggest and best stocks. Qs, more tech heavy. And then IWM, more of the small caps and momentum stocks that we like to trade. So let's go ahead and start with SPY. And what are we seeing here? First thing we want to do, what's the trend? Lately, I've been going back to the pandemic low. And basically, we are in an uptrend. Very easy to see, just draw a line. We've had a few dips. Every dip has been bought. And that recent April dip here, which was at the time looking a little bit scary. Each one of these dips has had selling volume come in. Each one of them has been bought up. And it looks like the same old that we have seen since the pandemic low. We get a scary dip, that dip gets bought, and then we slowly float higher. And it looks like that's what we're going to do right now. Constructively weak last week. Wasn't a huge run, but we started off June with this kind of slow float higher, and we are at all-time highs. So obviously SPY is looking good. If we look at the Qs, very similar, not at the all-time highs because it pulled back much deeper, but nearing all-time highs here. strong move since this pullback, and we are seeing yet another higher low that looks like a buying opportunity. So I would say bullish on SPY, bullish on the Qs in terms of the trend. And then IWM, this one's important. It's still in this range, and it's basically been in since 2021. And we want to see IWM, we want to see small caps break this range. It's a little surprising this is happening over summer too, because summer tends to be a little weaker. But we're at the top of the range now. This was looking really weak, and it looked like we might pull back to the 200-day moving average, but has come back strong. And IWM is testing highs now. Small caps and energy and some of the other heavy IWM type areas have been strong, and we've seen this strong run heading to highs. So bullish here, or at least we have a strong trend. This week or next week, we'd really like to see a little bit of consolidation and then a break of this range. That would set the market up really nice for a big run. So that's where we are in the market in terms of trend and what's happened. Now let's go under the hood, look a little deeper, and look at market breadth. So when we say we had the trends here, then I said it's a strong market as well. I was kind of jumping the gun a little bit, but market breadth helps us analyze, how strong is this market? And many of you guys know the first thing I like to do is compare SPY and IWM, and then also look at the equal weighted ETF. So let's look at SPY versus IWM first. The reason we do that comparison, it's the big guys versus the smaller guys. And we want to see the smaller stuff doing well in a healthy market. If not leading, we at least want to see small caps and mid caps keeping pace with the bigger stocks. So if we look at SPY here, biggest and best 500 stocks versus IWM, which is 2,000 stocks and not as heavily weighted in the big guys. While SPY has already broke the highs and IWM has not, IWM has made a very big run to its highs. So whereas it had been lagging and looking weaker here, we're actually seeing strength here. So I would say this is a positive for the market that IWM is so strong, and obviously if it broke the highs, it would be even better. So we've got a positive there in terms of the SPY versus IWM. Now let's look at the equal weighted ETFs. You guys know the drill here. SPY, again, the biggest and the best 500 stocks, but not only that, it's not equally weighted. So it's really the biggest and the best, because while if you took 500 stocks, each stock should be worth 0.2% to make 100%. It doesn't work that way. It's weighted. So Apple, the biggest stock in SPY, is worth 3%. I think Tesla is worth about 1.5%. If you took the top 10 holdings of SPY, they make up almost 30% of SPY. So they're very influential. So it doesn't tell us everything, right? If those 10 stocks are doing really good, SPY is going to look stronger probably than it really is. So we want to look at the equal weighted ETF, which is RSP for SPY. And what that's going to tell us is how are the rest of the stocks doing? Because no more than some of the other stocks in here, VFC, PVH, TPR, they're all worth exactly 0.2%. So let's do a comparison here. Now, strong, we still see the trend. What's interesting here is it didn't pull back as deep. So during the pullback, it had held up well. We talked about this in one of our get-togethers a few weeks ago, that we actually thought that we were seeing a little bit of underlying strength, because if we look at SPY here, SPY had pulled back deeper and hit the 50-day moving average, while RSP held up better. So we were right about that. And you can see what the market has done since. Now, what's interesting here is maybe RSP is lagging just a little bit. It hasn't taken out this candle here on 510, whereas SPY has. SPY is at all. So interesting that overall, if we take it a month or two out, RSP is stronger, but more recently, we've had a little more strength in the big guys, and that is reflected in, we're going to talk about it a little bit, in big tech, which is strong right now, and some of the other bigger stocks as well. So that's SPY. Let's look at the Qs here versus EW. So here's the Qs, just about to test highs. violated the 50-day moving average, pulled back harder. And if you guys have any questions, you can just post them in the chat here, and I'll try to get to as many as I can. Let's look at QQEW, and we're seeing about the same thing. So held up a little better than the Qs, and actually is a little stronger than the Qs, the QQEW, the equal weighted. So whereas maybe the equal weighted is lagging just a little bit in SPY, it's actually a little stronger in the Qs, and that's again reflected we've seen in big tech lately. So market breadth indications are good. I won't get into all the stocks we're watching right now, but just know that I am seeing more and more good setups in the market, more stocks to trade. So we can look at some of the, and there's also some other indicators we use. They're all pretty strong right now. But the other thing you can do is just look at your own watch list. Are you seeing a lot of good stocks? If you're seeing a lot of good stocks, a lot of good things setting up, that's usually an indication that it's a good market. If that's starting to shrink and you're not finding a lot of stuff, that's an indication that maybe the market is weakening, even if the index looks strong. So always look at look at the stuff you've been working on, how strong. Now, the one last thing, CPI jobs numbers came out last week, and it was very strong, historically strong, strongest we've seen since 2008. So you would think that's a positive, and for the overall economy and just, good for all of us, it is good. But the concern for the market has been strong, these types of strong numbers, inflation, and we're seeing high inflation numbers, and that leads to the Fed's increasing interest rates. And what's interesting is the market gets scared about that, and usually often when we hear that, it pulls back, if there's even any talk about that. And of course, when it happens, there's a pullback. Historically, if you look though, it doesn't over time really impact the market, but short term, the market gets jittery about that stuff. What's interesting here is we got these numbers, and the numbers were huge CPI numbers, inflation, maybe a little more expectation that the Fed could come in, but the market pretty much, whereas the market before has pulled back on that stuff, the market pretty much ignored that last week. So I would say that's a strong signal for the market that we got this news that could impact interest rates, but the market ignored it. So I think that's another indication of strength right now. So there's all that. Now, one thing is, and we can look at seasonality, June tends to be a flat or weak month. And oftentimes, historically, going back like 20, 30 years, what we see is there's often a quick pop in June because May tends to be weak. And then there's a pullback. And we've had a little bit of the pop. The question is there going to be a pullback? Now, this is seasonality. This is averages. Every year is different. Last year, coming off the pandemic lows, the market was actually pretty strong over summer, very strong over summer. So every year is different, but we want to know what the odds are. And the odds are June is not that strong. But we're getting indications that the market is pretty good. Just keep that in mind. Seasonality, June doesn't tend to be the best month. Okay, I've got a couple of questions here. Let's take a look. Anthony's asking about W patterns. Does the second low need to be higher than the first low? I don't worry about that too much. Whether it's higher or lower, you can look at a higher low as a positive that we didn't pull back that far. But then at the same time, you can look at a low that actually went lower than the first low. And you'll often hear, well, that shook out all the weak hands. So I don't worry about that too much as long as you're seeing a strong trend, which we're seeing right now. Aman's asking if we can look at BYND and Roblox. Yeah, let's go ahead and take a look at them. They're both on my radar. They're both on my watch list. So Beyond Meat here, you can see here a lot of back and forth since it IPO. It tends to make huge runs both to the upside and downside. And notice that it's basically stayed within its IPO low and high range that it made very quickly. Right now, I think we're seeing strength. I've been waiting to see if it can break out of this range right here. So basically it made a quick run and remounted the 200-day moving average here. Now it's consolidating. If it breaks this range, I think we could see a quick run to the highs because this does make very quick runs. And who knows when this will happen, but if it ever does break this IPO high around 235, that would probably set up the next big run in the stock. Roblox also very strong, recent IPO here. You can see here, had a range for a couple of months when it first IPO'd, broke that range, made a run, pulling back. I was actually interested in this on Friday when it looked like it was remounting the 9 EMA as a continuation pattern, but I didn't like the close here. So I'd wait and see, if it starts to hold that 9 EMA. Okay, I'm getting a lot of specific stock questions. Fadi is asking about how long growth stocks momentum will last. No one can predict that. You just basically have to analyze the patterns and keep trading it as long as it does last. And when it doesn't, you get out. Zoom and ZS. Let's take a look at Zoom here. I'll answer a few more questions and we'll get back to the outline. Zoom here is interesting. I still see it as an overall topping pattern. We've had distribution in terms of volume. We had the huge 2020 run. This looks very toppish. It is making a bounce here, which, these topping patterns take time to develop and you often see powerful bounces. I'm going to be really interested to see how it handles the 200-day moving average. Now, the 50 has gone below the 200, which is common in stocks that are topping. And now, does it fail on this bounce here? I think that's going to be key. If it doesn't fail and keeps running, turns back into a continuation pattern, especially if good volume comes in. So right now I'm kind of in wait and see mood on Zoom. ZS, very strong. So this was actually looking toppish as well, although it didn't have the bad distribution volume. And now has totally remounted the moving averages. The 50 actually stayed above the 200, so more positive here, and looks like it's right back on trend. And I think this IPO'd a few years ago, right? Yep, 2018. So, and of course, if we were to break the high here, that would be strong as well. Mike is asking about some of the fundamental stuff that I have on my charts. I just look at that real quick, especially if something is topping. And I really look at this when I see things that are topping. Oftentimes when things are topping, you'll start to see things like a few quarters before, maybe a little more weakness in earnings per share or revenue. So I'll do a quick glance at that. It's not necessarily an indicator that I'm really looking at to make decisions, but it's something to confirm what I'm seeing. Pan W and Crowd. Okay, we're getting a lot of stock questions here. I'm going to answer a few more, then get back to the outline here. Pan W, software stock. We're going to talk about software in a second, but software is interesting because a lot of these look like they were breaking down, and a lot of them look like they're now back on trend. And we're seeing that in Pan W, and good volume came in on Pan W. Pan W is in cybersecurity, which has been strong as well, as is Crowd. And if we look at Crowd here, also very strong. This is what I actually considered buying last week and didn't, but nice continuation pattern as well. Okay, let's get to some areas here. We're watching software, biotech, energy, travel stocks, and big tech. Let's start with biotech here. So the big news in biotech last week, we look at BIIB here. This is a stock that does work in Alzheimer's, and they had the big FDA approval. First time, don't quote me on this, but something like first time in the last 2 decades, so over 20 years, that a major Alzheimer's stock had been approved by the FDA. And there's been a lot of controversy around it because it seems like the FDA did some things in the approval that they normally would not do. But we got the big pop in here. A lot of stocks, a lot of biotech stocks are working on Alzheimer's. So it had a big, especially even the big guys like Pfizer, which we know is also related to vaccine. Eli Lilly, also big move here. So anything, about 15, 20 stocks related to Alzheimer's also were strong because of that news with BIIB. So if we look at the ETF now, ETF is very strong. So this is the IBB, one of the biotech ETFs, also very strong here. So a couple of things you can do. One, you can obviously look at stocks in biotech. I think 2 areas you want to be looking at. One is still the vaccine stocks like mRNA and Pfizer and a few others, but also now these Alzheimer's stocks, and there's like 15 or 20 to choose from. But the easier thing would be, so you're not tied to the news on a specific stock, is just trade the ETF. So if we look at IBB here, IBB obviously has improved a lot, had a big pullback from, if we look at IBB here, about 175 down to the 200-day moving average around 145 and is now at 162. Looks like a strong continuation pattern. Remember, it's a very news-based right now. If something came out related to these Alzheimer's stocks that was negative, probably would have an impact on biotech. But we can look at IBB. That's like SPY for stocks. It's the bigger biotech stocks. You can also look at XBI, which is more of the smaller biotech stocks. And this one's a little weaker, but still did have that pop related to that Alzheimer's news. So definitely be paying attention to biotech. Software. Let's look at one of the ETFs. A couple of ETFs good to look at for software. One is IGV, which is a software index, and you can see here was looking very weak, but now is back on trend. And this is the same pattern we're seeing in a lot of software stocks. We just pulled up PanW and CrowdStrike, and we saw almost this exact same pattern here. So looking strong, big improvement. And then you can also look at some of the cloud-based stocks like ETFs like WCLD, a little weaker because a lot of the at-home stocks are in these ETFs. So, Zoom and some of the other ones, and those have been weaker. We're seeing some talking patterns. Someone asked about Docu, same Docu as well. Sky is another one here that's a cloud ETF as well. And you can see they're a little weaker than overall software. And then cybersecurity, also hack, aptly named here. And you can see how strong cybersecurity is as well. Let's just pick a few stocks here. Okta is a little bit weaker. We already looked at, it's interesting here that PanW and CrowdStrike aren't in this one. So software, strong. Let's just pull up a few software stocks. I've got a list that I'm tracking. So we'll get a list that you can watch for next week. Coop, very weak. This is another topping pattern. So we'll do a mix here. Docu, this one's interesting because I saw this as topping, but it's very strong now. Someone asked about Docu in here. I personally wouldn't enter Docu, even though there's strong news here, until it breaks the high here. So that's what I'm waiting for Docu. Apps, very strong here. Pulled back to the 200-day moving average, remounting the 50-day moving average. This is one, along with CrowdStrike, that I was considering entering last week. Same with Snapchat. You can see how strong it is here. It's remounted the 50-day moving average. Team as well. There's a bunch here you could be watching, but there's about 5 or 6 here now that we've gone over that are good watches for next week and potential entries. All right, energy. I've been in energy for a while. Let's look at XLE. You can see here, pandemic low. We had the bottom formation. Now we have the continuation. You could also see this as one big cup and handle, and now it is breaking out of that range. And it's still a lot of room to the upside. You can see here, before the pandemic, it was sitting between 63 and 65. So a lot of room to the upside here. A ton of energy stocks you can be watching. I'm just going to randomly pull up a few that I'm watching. We are in ERX right now. We entered around 27 or 28. It's at 29.63. This is a double leveraged ETF. So XLE is the underlying ERX double leveraged. In terms of stocks, you can go with some of the big guys. Here's CVX. You're essentially seeing the same pattern. BP, MRO, and then there's oil drillers, exploration, a bunch of different types of smaller stocks. Here's Oxy, nice pattern here. This one's been really volatile. NOV, a good one as well. DVN, another one we are watching. And DVN's actually already broke its pre-pandemic high, so it's been showing a lot of relative strength, which should continue. Usually, when you see an area that is strong and you've seen relative strength in a stock, it'll continue to show relative strength. So energy, biotech, software, the travel stocks have taken a little breather after being strong. So let's look at stocks I have on what I'm calling my reopen list. Let's just skip to some of the travel ones. Here's TripAdvisor, obviously where you book your travel. You can see here, had made a huge run and not surprisingly has now pulled back. I would watch this in the next couple of weeks. If it remounts the 50-day moving average, I think it gets back on trend and will test the highs. So maybe an entry here around 47 and a target here of about 65. Let's go to Hilton for hotels. You can see how strong hotels were, already broke the pre-pandemic high and looks really strong here. So I'd be watching Hilton. MGM, very similar pattern here for resorts and casinos. Here's ALK for airlines. Airlines have pulled back a little bit, even though the numbers have been strong. And I would just watch for a little bit of strength here before entering airlines. Let's pull up the UAL here as well. You can see here, it's pulled back, holding its 50-day moving average. If it could show some strength and break where it's pulling back from here around 60, I think that would set up the next big run. And you can see how much room there is to the upside for something like United. And the expectation would be that numbers are going to increase continually as we start to travel more with the vaccines and over summer. All right, so that's travel stocks. Now let's look at the FANG and big tech. I'll just pull up a few of my favorites right now. Communications have been leading. So Google here, look at how strong Google is. It's hard to believe, but pre-pandemic, it was at 1,500 and now it is at 2,400 and showing no signs of slowing down. Every dip in Google is basically a buying opportunity. Facebook, exact same thing here. Maybe not quite as strong, but still strong as well, and is at all-time highs. Apple here, we are in Apple right now. It actually has not done much. It looked like it was going to remount the 50-day moving average and get back on trend. It's kind of in this moving average sandwich now. We're waiting for it to break over the 50-day moving average. Netflix has been the weakest of the bunch, which is not surprising since it's kind of in that at-home group, which did really good in 2020, but now not so much as we start to get outside more. And then Amazon has picked up as well. Was looking weak here, but now has remounted its moving averages. All right, so that's 5 areas to watch and some stocks to look at in those areas. This is that top-down approach we use. Start with what's the market doing? What are some of the stronger areas that you should be watching? And then pick your stocks from those areas. Let's look at some positions here. We are in Dash and BLI, among other stocks. DoorDash here, this goes, you can see here, this IPO'd in December, has been volatile, kind of back and forth. It's doing what a lot of the recent IPOs have done, which is not only break down below where they IPO'd from, but big runs to the downside, and now look like they might have bottomed. If we look at DoorDash here, look at the positive volume on this low here, which is a good indication. Buying interest coming in. So we have a good accumulation pattern, remounted the 50-day moving average. We entered here Thursday, somewhere in the 140s when we got that nice pop on Friday, and hopefully it continues to run here. The question is, how high do we make our target? And I'll wait and see with what the market and the stock is doing. BLI, another recent IPO, very similar pattern in that broke down below its IPO, went much lower, and now looks like it's bottomed and remounted its 50-day moving average. And a couple of stocks we took profits in last week. Adobe, which I still like, but it had earnings coming up, so we had to get out of it. But Adobe has made all-time highs here. And then Twitter, one of my favorite setups. When you see a strong stock gap down, look for the reversal play, and we saw that here in Twitter. The reason I mentioned Twitter is also because I think it's setting up for another trade. We exited on the test of the 50-day moving average, so we entered somewhere in here, got out as it's testing the 50-day moving average, coming into resistance. If it can remount the 50-day moving average, I will look to re-enter Twitter. All right, guys, so that's what I wanted to talk about today. We covered it in about a half an hour. So thank you for Saturday morning. Everybody have a fantastic weekend. If you want more, remember you can join up for the part-time swing trading course on bullsonwallstreet.com. I do these stocks and coffees every other week. So I'll see you here 2 weeks, same time, same place. And then the 2 weeks that I don't do stocks and coffee, I put out the weekly swing report that gets put on the Bulls on Wall Street YouTube page. So be subscribed to that. And if you're on the email list, you get it in your email. And then if you guys joined here today, you're part of the Bulls family now. So you can contact me anytime and I'll get back to you. Again, singhjd1@aol.com. Of course, Bulls on Wall Street, Paul J. Singh. And follow Bulls on Wall Street and me on Twitter, Paul J. Singh on Twitter, The Real Paul J. Singh on Instagram. I post stuff all the time there that you guys will find helpful. All right, guys. So I will see you guys here either this week with Bulls on Wall Street or in a couple of weeks here with Coffee and Paul. Talk to you guys soon.